And again, thank you guys for tolerating my illness. I'm going to start recording this. Okay, guys. So we are going to start with chapter 3. Now, last week we spent time talking about job order costing. And this week we're focusing on an entirely different type of costing called process costing. Process costing is often used when a similar product is being produced in mass, in volume, such as milk or shampoos or oil. And so really one is identical to the other. And the way in which we calculate the cost are going to be done a little different. So that's what we're talking about this week. What did I just do here? So oh my. Oh, there we go. Okay. So those manufacturers who use process costing, they produced products that are identical to each other, or in this case it says indistinguishable from one another, by using a continuous production process. Process costing is used by process manufacturing. So instead of recording product costs by each product, this system records product costs for each manufacturing department or each process, and we'll explain exactly why and how that works. Here are some companies that could use process costing: soft drinks, aluminum, computer chips, iPhones, Hershey bars. Those type of companies that would use a job order costing would do so because they're keeping track per job, such as movies, moving services, golf courses, advertising, and any type of home for that matter. Okay? So there's similar job and process in that, of course, we have to record and summarize all the costs. We still show direct materials, direct labor, and factory overhead. We still take that factory overhead and allocate it to various products. And we use a perpetual inventory system. We keep it going for the raw materials, work in process, and finished goods. So we continually update for our materials, our work in process, and our finished goods. And ultimately, the same information is used to help make decisions, but they're different. We're going to look at a new company, Frozen Delight, and we're going to compare that with the Legend guitars. Hey, baby. So, we've got a new company, Frozen Delights. Hey, Jim, will you get me another one? Oh, my husband has his earphones on. Jim, one more, please. So, Frozen Delights looks like it's an ice cream place. Our Legend guitars we've seen in the previous 2 chapters of building, manufacturing, and producing guitars. So the Frozen Delights is going to use a process costing system where the guitars is using the job order costing system. You see the direct materials flow into the work in process account. And what you can see is a little different in this scenario is we allocate our costs based on process. So in the first section where the items went, it was the mixing department. And then the items flowed over to another work in process account called the packaging department. And then from there, we have our finished product. Now, in the mixing department, we have our raw materials. We've got some direct labor, and we've got some factory overhead that will go into that department. Then when it gets transferred over to the packaging department, we also have direct labor. We also are adding some direct materials to this department, and we've got the factory overhead. In the job order costing section, we take each specific job and we keep a job cost sheet on each unique job until the product is finished. It still follows that job cost sheet into finish and ultimately into where the cost of goods happen. So this Frozen Delight records all the cost of making ice cream in the work in process accounts for the mixing and the packaging departments. The product costs of making a gallon of ice cream can include the direct materials, milk, cream, sugar, packing cartons. They all get added at the beginning of the process for both the mixing department and the packaging department. The direct labor costs, which are incurred by employees, are added. They're going to run the equipment and load and unload the product. And then the factory overhead, utilities, supervisors, depreciation, all of those costs get accumulated, get prorated or allocated to the various products or processes. So you see the physical flow in a process company. The materials go into the mixing department, then they flow over to the packaging department, and ultimately end up in the finished goods inventory until they are sold. So here we see the journal entries. The materials, just like the job order costing, are purchased. The raw materials are purchased and go into materials. When they're requisitioned to the various work in process departments. So the mixing department requests materials, the egg, the cream, the milk, the sugar. And that gets added to the first department, the mixing department. Also the direct labor and the factory overhead that's applied is put into that work in process for the mixing department. Once that process is completed, all those costs get transferred to the next processing department, which is the packaging department. From there, there may be some items that get added. So in this scenario, we have our factory overhead that is being applied. And you also see the factory overhead that's being applied to this specific department. And you see here cost of units that get transferred out, and then the cost of units that are being transferred in. You can also see that direct materials can be requisitioned from the mixing department, and they also can be requisitioned into the packaging department. Then once, and the direct labor, again, that factory overhead that is applied to this department also is allocated or applied here. Once that process is completed, that will then be transferred out of that packaging department and transferred in to the finished goods. When these finished goods are sold, it's at that time they're credited out of the finished goods and debited to cost of goods sold. So I just want you to really understand how this process works. It's very similar to job order, except instead of linking per job, we link it by department or process. So let's look at this exercise. Alcoa Inc. is the world's largest producer of aluminum products. One product that Alcoa manufactures is aluminum sheet products for the aerospace industry. The entire output of the smelting department is transferred to the rolling department. Part of the fully processed goods from the rolling department are sold as rolled sheets, and the remainder of the goods are transferred to the converting department for further processing into sheared sheets. Prepare a chart of the flow of costs from the processing department accounts into the finished goods accounts and then into the cost of goods sold account. So they provide us with the various accounts we will use. So as you see, we go from the materials, we'll go into the work in process smelting department. The factory overhead related to the smelting department gets applied to that department, the smelting department. Then the next step is called the rolling department. Once the process is completed in the smelting department, all of those costs get forwarded to the work in process rolling department, and factory overhead will be applied to the rolling department. Then, once that process is completed, all of the costs will be, okay, so here's the two different pieces. There may be, in this case, some goods that aren't going to be processed any further. So some of this process from the rolling department will go right into finished goods. But then there will be some of this product that will be further processed into the converting department. And while this is being worked on, the factory overhead can be applied into the converting department. So you'll have product that are rolled sheets, which is a finished goods, and you'll also have product that are the sheared sheets. So you see, the rolled sheets just needed 2 processes. The sheared sheets are going to have another cost associated with them. Both of these go into finished goods, and when either the sheared sheets or the rolled sheets are sold, it's at that time they'll be credited from the finished goods and debited into cost of goods sold. This is a perfect example how some items stop their processing because it's a completed product the way they want them to be, where other parts are aluminum to go on to be the sheared sheets go on to another process. The cost of production report summarizes the production and cost data for a department. The units of the department is accountable for and the disposition of those units. So they're accountable for it and they're accountable for disposing of them. The product costs incurred by the department and the allocation of those costs between the completed ones and the partially completed units is kept track of. So we create this production report by determining the units that need to be assigned to cost. And here's the difference. We come up with an equivalent unit of production. And then from there, we come up with a cost per equivalent unit. And from there, then we'll know how much is still sitting in work in process and how much is being transferred out. Okay? Like merchandise inventory, costs can be assumed to flow through the manufacturing process using the first in, first out, or last in, first out, or average cost method. Because the first in, first out inventory cost flow is the same as physical flows, the FIFO method is going to be used here. Okay? So you see, we started on July 1st with 5,000 gallons. We added costs for those 5,000 gallons, $5,000, and the conversion cost for those 5,000 gallons, they were basically 70% completed. So they kind of look and go, okay, as of now, those units are 70% done. So the inventory process as of the beginning of the month, being 70% done, is at $6,225. During the month, we had 60,000 gallons of $66,000 in costs. Then we add our direct labor cost of $10,500. Then we show the factory overhead that was applied for July of $7,275. So we have all the production costs that we need to account for during July. Now it tells us we transferred out 62,000 gallons to the packaging department. And as of July 31st, we still have on hand in this department 3,000 gallons that are 25% completed in regards to conversion costs. We need to figure out the units to be assigned. A unit can be any measure. It can be tons, it can be gallons, it can be pounds, it can be cases. But in this scenario, a unit's going to be a gallon of ice cream. So when we started with 5,000 gallons and we received the materials for 60,000 gallons, the amount of gallons we have worked on during the month is 65,000 gallons. For July, we have the gallons we started with on July 1st. Then we have the gallons that we started and completed during July. Then we have those gallons that were ended in work in process. I think that next computer's here, honey. Sorry, guys. So you see, we started with 5,000 gallons. We started and completed 57,000 gallons during the month because we transferred out 62,000 gallons. So because we started with 5 in July, during July 1st, we then started and completed 57 during the month. So the entire amount we transferred out completed were 62,000 gallons for the month. We have 3,000 that we're still working on as of July 31st. So the total units we need to be accounted for in July are 65,000. Basically, we know it was 65,000 gallons in the previous slide. What we're doing in this slide is accounting for all those 65,000 gallons. We began with 5. We ended with 3 still in work, being worked on. And so that's how we're figuring out what we started and completed, the total amount we transferred out. We need to do that because we need to assign costs to these gallons. So you see here, 5,000 we started with. The 57,000 we started and completed in July. And the 3,000 are left over at the end of the period. Okay? Whole units are the number of units in production during a period, whether they're completed or they're not completed. Equivalent units of production are the portion of whole units that are complete with respect to materials or conversion. Remember, direct labor and factory overhead are conversion costs. Assume that a 1,000-gallon batch of ice cream at Frozen Delights is only 40% complete in the mixing process on May 31st. Now, we know all the materials have been put in already, but in regards to factory overhead and direct labor, they're only 40% complete. The whole units and equivalent units of production are shown here. The 1,000, what, honey? The 1,000 gallons, all the materials have been put in, but the conversion costs are only 40% complete, which means there's 400 gallons that we can show have been completed. To compute equivalent units for materials, it's necessary to know how materials are added during the process. In the case of Frozen Delight, all the materials are added at the beginning of the mixing process. So that's why we know the materials are 100% complete. Okay? Here, this shows you the equivalent units. In terms of beginning the period, 100% of the materials that were added in June are in here for July. So they were 100% complete in terms of materials. The 57,000 units that were started and completed in July were 100% complete. And those 3,000 units that are still in this process as of July 31st, we're still 100% complete as to materials because they're added at the beginning. So in this case, we don't have to worry about material equivalent units because they are 100% put in right away. Now, when we're dealing with equivalent units here, we're going to look at our labor and our factory overhead. Direct labor, utilities, depreciation usually happen uniformly, not sporadically, pretty on a straight level in processing. So if we know we brought in 5,000 units that were 30% complete in conversion costs, which again is direct labor and factory overhead, that really means only 1,500 of those units were, we have to relate it to full units. So 1,500 units is how we're going to show the equivalency. The ones started in and out in the July, 57,000 equivalent units. And then at the end of the month, those 3,000 units were 25% complete in terms of conversion costs. So we'll come up with 25% of 3,000 or 750 units will show for equivalent units of production. So we have to come up with an equivalent units of production in terms of how we come up with the full equivalent units of production. So here, in terms of equivalent units of production, we started the period with 5,000 units, but since they were 70% complete, that's 3,500 equivalent units, which means during the period, I think it was 30% complete. So it was 30% equivalent units coming in. So they had already been 70% completed in June. So we have 1,500 equivalent units we need to still work on. Plus they were 57,000 equivalent units that began and ended in the month. And then what was completed during the month of July was 750 equivalent units, which shows for August then another 2,250 equivalent units needed to be completed during that time. The cost per equivalent unit for direct materials and conversion cost is computed by taking the total direct materials cost for the period divided by the equivalent units. And the same is true for conversion costs. We take the total conversion costs and divide it by the equivalent units. So for July, we know our equivalent units in terms of direct materials and in terms of conversion costs. In terms of direct materials, it's 60,000 equivalent units. In terms of conversion costs, it's 59,250 equivalent units. Excuse me. So the direct materials and conversion costs incurred by Frozen Delight in July we've got our costs of $66,000 for our direct materials. Our conversion cost are our direct labor and our factory overhead, the $17,775. So our total product costs are $83,775. But what we need to do is figure out how much that is per equivalent unit. So the direct materials and conversion costs per equivalent unit are $1.10 for the direct materials, which is the $66,000 divided by 60,000 gallons. And for conversion cost, it's going to be that $17,775, which was back on this slide, divided by the 59,250 gallons that we determined back here to come up with 30 cents a gallon. Product costs have to be allocated to those units transferred out and to the partially completed units on hand at the end of the period. So we do all this so we know what amount was transferred out in costs and what amount in cost is still in that department work in process at the end of the period. So if we know $90,000 are the total production costs in July, we can allocate how we determine that. We start with 5,000 gallons, the direct material costs, $5,000. We add the conversion costs of $12.25 that started the month, began the month, the $6,225. We know we added 66,000 in gallons. We added our direct labor of 10,500, and we added our factory overhead of $7,275 to give us the total production costs that we need to account for, the $90,000. Okay, so we need to account for the $90,000 in cost. How do we allocate these costs to Group 1, which we already know, Group 2, and Group 3? We know we came in with $6,225 in cost for the month. We know our equivalent units for completing that July 1st in process inventory that we still had to work on were 1,500 units. So we have the equivalent cost per unit of $450. So we get that from the 1,500 equivalent units at 30 cents for the conversion cost per unit is $450. We know that was transferred to the packaging department. That's the section of what was in process at the beginning of the month. Then we know that 57,000 gallons were started and finished in the month. The direct materials is $110 per those 57,000 gallons, and the conversion cost is 30 cents per gallon. So the amount that began and was transferred during the month is the $79,800. So we can take the cost of the July 1st, what we started with, the cost that we started and completed in July, to know what was actually then transferred in cost amount to the packaging department. And the 3,000 gallons in process on July 31st that were 25% completed regarding conversion costs are still in this department as of the end of the period. So we know all the materials were put in right away. So in terms of direct materials, $3,300 is the cost assigned to them. The conversion costs, we know the equivalent units are 750 equivalent units at 30 cents complete, 30 cents per equivalent unit. So we can take the direct materials plus the conversion cost to give us our total cost that are on hand still in that department at the end of the period. So you see, that total is $3,525. We can figure out that for that $90,000 of cost during the period, we can assign it to that which began the period and what needed to be completed, that group 2 which was started and transferred out in the month, and then group 3, that amount that is still needing to be completed at the end of the month. Okay? Here, this shows the entire production report for the mixing department. It shows the units charged to production, the 5,000 that we started with is shown here, the 60,000 received from the storage or the materials room. So we have 65,000 to account for. We show during the period those 5,000 units had already in June had all the materials. So in July we have to account for the equivalent units that still needed to be worked on, 1,500 units. The amount that began and ended during or were transferred out during the month, whole units, 57,000 equivalent. So that was transferred out. What was on hand at the end of the month, 3,000 units. In terms of direct materials, all the direct materials were applied at the beginning. But in terms of conversion, only 25% had been completed in July. So this provides us with our equivalent units. And then from here, when we look at our costs, we can see how we allocate equivalent units in cost. And then what was assigned at the beginning of the period, the cost that came in to allocate for our total cost. So you see the total cost accounted for by the mixing department is $90,000, and we have to allocate that $90,000 to the various groups here. Okay? The number of units in production during a period, whether completed or not, is called whole units, equivalent units of production, partial units, or converted units. What do you guys think? Can someone just spell it, call it out? Anyone else? Did y'all get that? Whole units are the number of units in production, whether completed or not. It's the equivalent units of production that are the portion of whole units that are completed with respect to materials or conversion. And guys, what are conversion costs? Direct labor and factory overhead. Let's look at this problem here, guys. The converting department of Torr & Company had 19,200 units in work in process at the beginning of the period, which were 35% complete. During the period, 86,400 units were completed and transferred to the packaging department. There were 15,200 units in process at the end of the period, which were 60% complete. Direct materials are placed into the process at the beginning of production. Determine the number of equivalent units of production with respect to direct materials and conversion costs. So guys, this is going to be similar to what we've just gone over. Materials happen at the beginning, and so the material cost is added immediately. So we're seeing here 19,200 units were work in process at the beginning of the period that were 35% complete. So that means 65% need to be completed during the period. 86,000 units were completed and transferred to the packaging department during the period. And at the end of the period, there were 15,200 units on hand. So we have to show the whole units. We started with 19,200. And then it shows during the period, 86,400 units were completed and transferred. So the way we figure that 86,400 units is we have to subtract what was in the department at the beginning of the period. So the 19,200, since we started with, means that what we started and completed during the period was 67,200. Okay? What was transferred to the packaging department? 86,400. And if we had 15,200 units on hand at the end of the month, then that shows we had actual whole units of 101,600 during the month. So equivalent units, in terms of direct materials, we put all the direct materials in at the beginning. So for those units that were still in work in process, the materials happened the previous month. The 67,200 units, all the materials were added now. And that work in process, at the end of the month, all those materials were added during this month. Then to come up with the equivalent units for the beginning of the month, since that 19,200, 35% had been completed before the beginning of the month. That means 65% needed to be completed during this month. Okay? And then the work in process at the end of the month, since 60% has already been completed, we need to come up with the equivalent units of that also. So for materials, it's 82,400 equivalent units. But in terms of conversion, we had to calculate what was completed during the month to come up with our 98,800. Does that make sense, guys? It's a little different. That's a lot more detail. But this is the process. Here's another one. I guess it'd be nice to just get a little chat where you guys are at. Are you feeling overwhelmed? Is it making sense?
Could you go back for a second?
This one?
Yeah. How did you get the conversion for transfer to packaging department?
Because
Like the 79,680.
okay, because you add these two. So
Oh,
the amount
okay.
that started and completed, that was 100%. This amount, since it was 35% completed at the beginning, we have to do 65% of this 19.2, which is the 12,480. You add those two to get the 79,680. Does that make sense?
Yes.
Thanks, Will. Any other questions, guys? Remember, if you're asking it and you're wondering, everybody else is wondering it also. So thank you for asking. Anybody else? Guys, remember I am recording this. So for those of you who are on a little phone, you will be able to see it again. Now, this exercise, equivalent units of production, data for the two departments of Gurley Industries for September of the current fiscal year are as follows. We have the drawing department and we have the winding department. We see in the drawing department, as of June 1st, the work in process, there were 40,000 units that were 38% completed. That means during this month of September, work in process June 1st, data for the two for September. I did something wrong there. It must be for June. Sorry, guys. Do you see that if prior to this month they were 38% completed, that means during this month they need to be 62% of cost added to them. Completed and transferred to the next processing department during June, 600,000 units. So what that means is we'll figure out, based on what began the period, 40,000 units at 38% completed, plus what came in and went out will all total the 600,000 units. And then work in process at the end, 70% of 52,000 units were completed during the month in the drawing department. When we look at the winding department, we started with 12,000 units, 35% completed, which means we still have 65% to complete in this month. There are 591,000 units that completed and were transferred to the next department. So we will figure out that 591,000 units is going to be those 12,000 units, 65% completed, plus the difference to total our 591,000. And then we have the 21,000 units, 60% completed are still on hand. Production begins in the drawing department and finishes in the winding department. If all direct materials are placed in process at the beginning of production, determine the direct materials and conversion equivalent units of production for September, the drawing department, and B in the winding department. Sorry guys, I kind of screwed this up. This should probably be August here, but I'm not going to worry about it right now. So, we see 40,000 units were the whole units that we started in September. Since they were 38% completed, 40,000 times 38% completed is 24,800. Excuse me, no. That's what they started with, but what needed to be completed during the period would be 40,000 units times 62%. That was being worked on during the month. What was started and completed in September was 560,000 units. Now we know that because, let me just kind of make sure I'm thinking this through, guys. If 600,000 units were transferred during the month, then that means that if we started with 400, we brought in the 560. The 560 started and ended during the month. So the 600,000 units are the whole units. I'm getting myself confused here. But in terms of conversion costs, we have to figure out this 560,000 units started and were completed in the same period. But in terms of conversion, we started with what we needed to complete, 24,800 plus the 560. So in terms of conversion costs, we have 584,800 in equivalent units. The inventory in process at the end of the month, we know 52,000. In terms of materials, it's 52,000 equivalent units. In terms of conversion costs, they were 70% complete. So 52,000 units at 70% gives us the 36,400. So here are our whole units. Direct material equivalent units are 612,000 because all the direct materials were added the month before. And in terms of conversion costs, what we started with plus what we added in and transferred in the same month, we had 584,800 equivalent units transferred out, plus what was on hand at the end of the month gives us how many equivalent units in terms of conversion costs. Okay. Now, here's the winding department. I'm going to move this over so you can see this better. Whoops. I'm trying to... There. So, the winding department began with 12,000 whole units. but they were 35% completed going into the month. So what was being worked on during the period would have been 12,000 units at 65% completion. They started and completed 579,000 units during the month. And the way we know that, since the total amount transferred was 591,000, and we started with 12,000 units, we can back in to see what was started and completed during the month. The 591,000 whole units, we only have for equivalent units 579,000 for this month, because all of those 12,000 units, the materials were put in the previous month. But in terms of conversion, the 7,800 plus the 579,000 gives us our equivalent units. And then what's on hand at the end of the month, in terms of materials, everything was put in. But 60% was completed during the month. So our 21,000 at 60% gives us our 12,600. So this exercise here, this portion, gives us our equivalent units. Now this exercise will talk about the various costs. The following information concerns production in the baking department for August. All direct materials are placed in process at the beginning of production. Determine the number of units in work in process inventory at August 31st. Determine the equivalent units of production for direct materials and conversion costs in August. So, in the baking department, there were 36,000 units, and we started with them being 75% completed. That cost was $207,360. During the period, we brought in materials for 200,000 units, and the cost of the materials is $250,000. I don't like my numbers here, though. This does not add up right. Let me just, exercise 3.7, I just need to look at this. 1 second. I don't like my numbers not adding up. 1 second, guys. I apologize. I just feel like something's wrong. This is exercise 3.7, right? Oh, okay, that is better. Now I'm not feeling so crazy. 450,000. So this This should be 450,000. Okay. Sorry about that. Just didn't sound right. I'm looking at the numbers and it's like, okay, what have I done wrong? Okay. So that makes more sense. Are you with me, guys? Sorry about that. So 200,000 units came in, but the cost of the materials is $450,000. So our new balance here is $657,360. The direct labor put in was $207,900. The factory overhead is $680,400. The finished goods that were transferred out, left this department, 196,000 units were transferred to the next department. So what do we show? The balance on hand, and what are the equivalent units that are 50% completed? Okay. Now remember, the materials are placed in process at the beginning. So the materials, 450,000, that's going to be equivalent units are going to be the same of what came in. But the conversion costs, we had to complete 25% of the conversion cost in August. And at the end of the month, 50% of those conversion costs were completed. Okay? So we started with 36,000 units. Okay? We placed into production 200,000 units because we know we've transferred out 196,000 units, which means 40,000 units were on hand at the end of the period. So we know we started with 36,000 units. It tells us we began and worked on 200,000 units. If we transferred out 196,000 units, what was on hand at the end of the period would have been 400,000 units. So we see here, we come up with the equivalent units. The 36,000 units that need to work on 25% is the equivalent of 9,000 equivalent units. Since we transferred out 196,000, we know we began and completed 160,000 units during the period. 196,000 units were transferred out, which shows our conversion costs, equivalent units of 169. We had 40,000 units on hand that were 50% completed in terms of conversion costs, which would have given us the 20,000 units. So we're dealing with equivalent units for conversion costs during this month of 189,000. The 9,000 plus the 160 gives us our 169,000, plus our 20 gives us our 189,000 units. Okay? The charges to work in process, assembly department for a period, together with information concerning production, are shown here. We show 30,000 units, beginning 40% complete, and we have our costs. Then, what was transferred to finished goods, is 406,000. We show our direct materials, we show our direct labor, and we show our factory overhead. We need to determine how many units are on hand at the end of the period. 30% complete. What I'm seeing is we started with 30,000 units. We added 400,000 units. Okay? And we transferred to finished goods 406,000 units. So if we started with 30, we added 400,000, we transferred to finished goods 406,000 units. That means we had on hand at the end of the period 24,000 units. Now, the charges to work in process, all the materials are placed at the beginning of the period. So we know what our whole units were, the 30,000 units. We started and completed during the period 376,000 units, and that's just the difference between, let me just make sure I'm paying attention, the 400,000 units in materials plus, let me just see here, the 24,000 units that were still work in process on hand at the end of the period. So since we know we used direct materials of 400,000 and we had on hand 24,000 units at the end of the period, that which we began and ended during the month would be 376,000 units. So for direct materials, we've got our 376,000 units plus our 24,000 units in terms of materials, equivalent units on hand at the end of the period, the 400,000 units for the month. And in terms of conversion equivalent units, we had 18,000 units, equivalent units of beginning work in process, plus the 376,000 units that started and ended, completed, gives us our total. And then it told us our ending units, the 24,000 units, were 30% completed in terms of conversion cost, which is our 7,200 units. So our equivalent units for the month in terms of conversion is 401,000, 200,000.
Nancy?
Yes.
So I thought when we do the balance for units and it has like 30%, like a percent completed, I thought we do 100% minus the percent completed. So wouldn't it be 70%? Why is it 30? Like why are we doing completed now?
At the end of the unit, at the end you're talking about here?
Yeah. Is it because it's the end of the period?
At the end of the period, what we're doing is we're trying to come up with units, what was worked on during the period. If they were 30% completed, then that means these 24,000 units had cost in them equivalent to 30% of these 24,000 units. Going into the next month, costs will be added of 70%. But what we're trying to figure out is what happened this month. So at the beginning of the month, if it tells us they were 40% completed, that means for the month, 60% still needs to be completed. These conversion equivalent units are all about assigning cost to the month.
Okay, thank you.
You bet. Any other questions, guys? Okay, so how do we go about calculating cost per equivalent unit? We know our direct materials are at $11.25 per equivalent unit. But what we need to figure out are our costs per equivalent unit. So it gave us that the direct material cost is $11.25 per equivalent unit. We have to look at what are all of the conversion costs. Conversion costs are direct labor and factory overhead, the $4,012,000 plus the $20,060. And do you see our conversion equivalent units are 4012? So we take our conversion cost of $24,072, divide that by 4012, the number of equivalent units, to come up with our cost per equivalent unit for conversion, which would be $60.99. Okay? So you would see here, we would have determined the units started and completed during the period. It would be the $11.25 for materials plus the $60 of conversion costs times the 376,000 units that started and completed during the period would be $26,790,000. NAPCO Refining Company processes gasoline. On June 1st of the current year, 6,400 units were 3/5 completed in the blending department. During June, 55,000 units entered the blending department from the refining department. During June, the units in process at the beginning of the month were completed. Of the 55,000 units entering the department, all were completed except 5,200 units that were only 1/5 completed. The equivalent units for conversion costs for June are determined here. Now, list the errors. I hate these kind of questions though, because it's like you're trying to figure out, we're trying to learn it, more or less figure out maybe where they screwed up. So to process units in inventory on June 5th, do you see where they screwed up? Is to process units in inventory on June 1st, since we came in with 6,400 units 3/5 completed, all we needed in June was 6,400 units 2/5 completed, right? Now, let me just show you this. Let me go through this. In computing the equivalent units, those 6,400 units really only needed to be 2/5 completed instead of the 3/5 completed. Okay? In computing the equivalent units for conversion cost for units started and completed in June, the 6,400 beginning units, rather than the June 30th 5,200 units, that was screwed up. So remember, when we know that units are going to be transferred out, we show the equivalent units started and completed should be 49,800 instead of how they made it, the 48,600. So basically here, 64 units at 2/5, that is the equivalent units for this month. The units that were started and completed in June was 55,000, and we need to show they were started and completed. We use the 5,200 ending inventory instead of the beginning, and the units still in inventory, we had 5,200 units that were only 20% completed. So that part was right. So just so you know how you calculate the equivalent units of production. We were only 80 off, kind of like, who cares? Sorry, you don't want to hear that from me. I'm going to move on just because we've got other things to cover. But I went through a ton of examples here so you could learn all the different ways. Here, let me put this over here. Whoops. If we have extra time, I'll come back and go through some more of these. Oh, shoot. What am I doing wrong? Cost per equivalent unit. Let's just go through this. The journal entries to record the cost flows when materials are being requisitioned from the department. This is actually them purchasing the materials from an outside vendor. So as we're purchasing materials and we receive them, we debit our materials and we credit our payable. Then the mixing department requisitioned milk, cream, and sugar, 66,000. This is the total amount from the July data. Packaging materials of 8,000 were requisitioned from the packaging department. Indirect materials for the mixing and packaging departments were $41.25 and $3,000. Remember, the materials going into the mixing department, we debit our work in process for mixing. The materials going into the packaging department, we debit our work in process packaging. Any indirect materials would be factory overhead. Indirect materials for mixing was $4,125. That would go into factory overhead. The indirect materials for packaging was $3,000. And we would credit materials for the full amount. The labor incurred in the mixing and packaging departments, we would put them into each department. Work in process mixing, $10,500. Work in process packaging, $12,000. We'd credit our wages payable. Then we show our depreciation between mixing and packaging. Again, depreciation goes into factory overhead. We debit our factory overhead for mixing, debit our factory overhead for packaging, and credit our accumulated depreciation. Our applied factory overhead that went to the two different departments, $7,275 for mixing, $3,500 for packaging. So we debit to the work in process specific departments our factory overhead that's being applied. Whenever we apply it, we credit our factory overhead. And then remember, at the end of the period, we'll learn if we under or over applied our factory overhead based on if there's a debit balance in factory overhead or a credit balance. If it's a debit balance, that means we under applied it. We didn't give enough factory overhead or allocate enough. If it's a credit balance in factory overhead, that means we over applied it. We made that cost too great. And then when we transfer the cost from the mixing department to the packaging department, we just credit the mixing department, debit the packaging. When we transfer the goods out of packaging into finished goods, we debit our finished goods, we credit our work in process packaging. And then when we sell those goods, we debit our cost of goods sold and credit our finished goods. Here, you see the flow of what we just showed in journal form or T accounts. You show the flow of the various accounts. Do you see? We show the mixing department has a July 31st balance here of $35.25. We see the work in process packaging balance is $7,725. Pine Tree Manufacturing uses a process costing system in its production. During the past month, it transferred completed goods of $95,000 ready to be sold out of the final assembly department per its cost of production report. Which of the following would be the proper transaction to record this activity? We wouldn't credit finished goods, would we? We would debit finished goods. To remove it out of its final assembly department, wouldn't we credit that final assembly department and we would debit our finished goods? Okay? Let's see what else we have. Let's look at this one. Keone manufactures a sugar product by a continuous process involving 3 production departments: refining, sifting, and packing. Assume that records indicate that the direct materials, direct labor, and applied factory overhead for the first department, refining, were $900,000, $375,000, and $2,860,000 respectively. Also, work in process in the refining department at the beginning of the period totaled $175,000, and work in process at the end of the period totaled $220,000. Journalize the entries to record the flow of costs into the refining department during the period for the direct materials, direct labor, factory overhead, and then the transfer of production cost to the second department, sifting. So guys, we have to know what we began the period with, the 175, and then what we ended the period with to know then what was transferred to the sifting department. So basically, to show the direct materials, we would show the work in process, refining department, $900,000. We credit our materials. The direct labor, work in process, refining department, $375,000, credit our wages payable. And then our factory overhead applied, work in process, $2,860,000. Okay? Then, what is transferred to the next department would be our $175,000 that we began with, plus the $900,000, plus the $375,000, plus the $2,860,000, minus what was left at the end of the month, the $220,000. So $4,090,000 is transferred, a debit to work in process sifting department, a credit to work in process refining department. So this cost production report is used by managers for analyzing the cost per equivalent unit between periods. So Frozen Delight's cost of production report for the mixing department shows that beginning inventory is $6,225. Using the data, the June cost per equivalent unit of materials and conversion cost can be calculated by figuring out the equivalent units for materials, the equivalent unit for conversion costs. In July, the cost per equivalent unit of materials increased by 10 cents per gallon, while the cost per equivalent unit for conversion decreased by 5 cents per gallon. Frozen Delight's management can use this analysis as a basis for figuring out what's going on. Now, it just could be as simple as rising prices, but what's going on with the conversion costs? Okay, so it's just information to provide management with so they can look into things. The cost of production report is often used by managers for analyzing the change in the conversion and direct material costs per the equivalent units between the periods. Okay, I know some of you guys might need to get out because you have another class, but I am going to spend some time going through this production report because this is a biggie, okay? So if you need to leave, feel free to. I will record this and post it on D2L. The debits to work in process, the roasting department for Morning Brew Coffee Company for August, together with information concerning production, are shown here. So we see the work in process on August 1st, 700 pounds, 20% completed, and they give us the cost. Then they show the direct materials, the conversion costs to give us the total. They give us our coffee beans added during August, which was 14,300 pounds, a cost of $65,780. The conversion cost during August, they tell us, is $21,942. Then we have to figure out the work in process at the end of the month, 400 pounds, 42% completed. And the goods finished during August are 14,600 pounds. So all direct materials are placed in process at the beginning of production. We are going to prepare a cost of production report showing direct materials and conversion equivalent units of production for August, direct materials and conversion cost per equivalent unit for August, cost of goods finished in August, and cost of work in process at August. And then we'll compute and evaluate the change in cost per equivalent unit for direct materials and conversion from the previous month. So there's a lot to do here. So we're going to start by showing whole units. We start with 700 whole units. We added 14,300 pounds for total units accounted for in the roasting department was 15,000 units. Now, we transferred 14,600 pounds to finished goods. So do you see how we know that was transferred to finished goods, 14,600? If we started with 700, we know then 13,900 units were started and completed in August. Okay? then we have to account for, if we have 15,000 units and we know 14,600 were transferred and completed, that gives us 400 units on hand at the end of the period. One second here. Okay, so we know 400 units had to be inventory at the end of the period. Now we know the materials get put in immediately. So those 700 units that we started the period with, they were already put in July. We know those 700 units were 20% completed starting in August. So that means we need those 700 units had cost worth 80% equivalent units in August. The 13,900 that started and were completed, that was the full conversion units of 13,900. So our total cost, total units transferred in August was 14,600. The equivalent units for direct materials is the 13,900. The equivalent units for conversion would be the 560 plus the 13,900. We know at the end of the period, those costs still in work in process were 42% completed. So we would have the 400 units, 42% would be 168 equivalent units. Okay, so we add the 14,460 plus the 168 gives us equivalent units for conversion of 14,628, and equivalent units per materials would be the 14,300. Okay, so here we show the costs. We have the costs that went into the department. Sorry, there's so much to see here. We had $65,780 of beans added during the month, and conversion costs were $21,942. So our direct materials, $65,780 plus conversion, $21,942. We come up with our equivalent units for materials. They were 14,300. That came here. And the equivalent units of conversion here is 14,628. And this gives us our cost per equivalent unit. So we know, here's what we started the month with. The cost incurred in August would be the $65,780 plus the $21,942 gives us our $87,722. So we take our beginning units that we started plus what we added gives us our total cost we need to account for. So we needed the inventory to complete that started in August to complete. There were $840. Cost of completed August 1st work in process is the $34.79 plus the $840, the $43.19. We add what came in costs during the period to show what was transferred to finished goods. And then here would be the costs that are still in this department on hand at the end of the period. This would be 400 units at $4.60, which the materials are. This would be the 400 times $1.50. No, sorry. It would only be the portion of equivalent units at the end of the period. So the equivalent units at the end of the period times the $1.50 gives us our $2.52 here. We come up with our cost, and we can account for all of the costs. Guys, this is the production report. Okay? Compute and evaluate the change in cost per equivalent unit for direct materials and conversion costs from the previous month. So we show a decrease in costs. We started it at $4.70, those units at the beginning of the period. So it went down 10 cents. And the conversion cost from the beginning of the period was $1.35, and it's now at $1.50. So on one hand, the materials went down, and then on the other hand, the conversion cost increased. Here is another example of a cost of production report. We see January 1st, the work in process was 1,400 units at 75% completed. The direct materials, we show $12.65 per those 1,400 units. And the conversion costs were 75% completed in the previous month, and we see our equivalent conversion cost. We see what was added during the period for materials, direct labor, and factory overhead. And then we see what was finished out. Goods finished during January, 56,200. And then we know at the end of the period, we had 3,200 units on hand, 30% completed. So we'll look at a production report for the cutting department. Again, we show whole units. If we know, well, it tells us what we received. We received 58,000 units from the weaving department, and we started with 1,400 units. So we know the total units to be accounted for. And then we know what was transferred out to finished goods. It told us, I believe, 56,200 units. Yep, it tells us 56,200 units were transferred out. So we know we had 3,200 units on hand at the end of the period because we have to account for 59,400 units. So it shows us that, let me move this over, the inventory at the beginning of the period had been 75% completed in terms of conversion. So during the month, we have 350 equivalent units. We know what needs to be started and completed. So we know our total transferred to finished goods. The whole units are 56,200. In terms of direct materials, it's 54,800. In terms of conversion, it's 55,150. And since our ending work in process was 30% completed in terms of conversion, we can take 3,200 times 30% completed to give us our equivalent units here. So total units to be assigned for cost. For direct materials, it's 58,000 equivalent units. For conversion cost, it's 56,110 units. So here we take our total costs. Let me bring this over. Transferred in from the cutting department. And we take the costs here, the 134,550 plus the 151,611. Those were direct labor costs for January and factory overhead for January. Okay. And then we divide it by our equivalent units to get a cost per equivalent unit. We then assign these costs to beginning inventory, cost incurred during the period, and then those that were, here's the inventory on hand, here's what needed to be completed, cost of the January 1st work, here's the cost that was started and completed during the period, and here's the cost of work in process at the end of the period, which allows us to account for all the cost, the 1,051,521. Okay. Here again, you can compare what the materials were from the current period and the previous period, and then what the conversion costs were per equivalent unit from the current period and the previous period. Both look like they had increased. So I mean, guys, there's a lot of these. You're welcome to go through all these slides. I probably went a little overboard, but I do that just so you have, and these are all on the PowerPoint in the classroom, that you have the ability to go through problem after problem until it all clicks together. Analysis and decision making, I think I better end here because I've gone on for too long. But are there, the weighted average inventory method. Basically, we have been doing the FIFO method, and there is a way you can take the weighted average to come up with the costing method. So you might want to just take a look at this when you go through your homework. Guys, have a great week.